Hello, it's Liz Tolentino with Keller Williams in Valencia.
Keith Reno, Wintrust Mortgage.
Hey Keith, let's talk about closing costs.
Yeah.
All right, closing cost. When you're buying a home or selling a home, it's the cost of essentially buying a home or selling a home, and for a buyer, it's costs that go in addition or are part of your overall purchase, in addition to your down payment. And so there are several ways that closing costs could potentially be paid for.
Yeah, typically three ways. Generally, we can have the seller contribute towards cost.
Right.
We can have the buyer pay their own cost.
Exactly.
Or we as the lender can contribute by giving lender credit towards the buyer's cost.
Exactly. And now, when it comes to a seller potentially paying a buyer's closing costs, there are some negotiations that take place in order to accomplish that. Now, a seller could see it as a win-win if they are still netting what they were hoping to net from the sale of the home, and see it as a way to help the buyer be able to qualify or be able to close on the loan by crediting them from the purchase price a certain amount. So let's say if you're a buyer, you're looking for a $500,000 home, you make an offer for $505,000 and you ask for a $5,000 credit. That credit can go toward paying for some of your closing costs or even buying your rate down. And so there is some negotiation that happens there. Sometimes we go back and forth. Sometimes the amount that we initially ask for, the seller doesn't agree. But typically we can get a seller to agree to some closing costs, depending, of course, on what the situation is and what the seller's net is going to be.
Yeah, and then the buyer, of course, I think that one's straightforward. The buyer paying their own costs. So
right. So you've saved for your own purchase. You have enough money for your down payment and have enough money for your closing costs, which I'd say about 80% of our buyers do that.
Yeah, I mean, if that's a position you're in, wonderful. But if
Awesome.
you say just have the down, then
Right.
obviously there's some opportunity to have the cost paid elsewhere. But if you have your own available funds, potentially getting a little lower price, potentially having a greater chance of having your offer be the accepted offer and the winning bid if you're not asking for a cost, maybe
Right.
gives us a little higher percentage there.
Yeah.
But then the third way, is it all right if I talk about lender credit?
Yeah, absolutely.
So
for it.
lender credit. So the lender credit is kind of our ace up the sleeve, as I like to call it. We like to try to avoid it. You'll hear some advertising out there that lenders have no fees or no cost or things of that nature. But what sometimes is not advertised with those are higher interest rates, and that's how lender credit is generated. So we take what the person qualifies for, that market rate, that given rate for that day, and if that individual is willing to accept a little higher interest rate than what they actually qualify for,
Right.
then that's how we as lenders generate credit that we can use towards
Give them
a buyer's cost.
Right, exactly. And I'm just dying to say this, but there is no such thing as free money. I mean, money just doesn't come out of nowhere and just go somewhere. So, Keith, there is other news that I hear, like, advertisements that I hear, like no points. What are points, and do you charge points when you originate a loan?
Yeah, great question. So no, we don't, as a standard practice, charge points. Sometimes some brokers or lenders out there with maybe a different lending structure may charge points as a way for them to generate revenue.
Sure.
For us and most lenders out there, if you are paying a point, it's because where that market rate is, you're now choosing to pay some money up front to buy down the interest rate and then have more of a long-term savings. So
Got it.
we can absolutely do that as well. That's a part of, I guess, us or the lender that you're potentially working with. If not myself, you want to make sure you're asking those questions. Hey, what if I can take a lender credit? What if I buy down the interest rate? What does that look like short and long term?
Cool.
Because we have to see what's going to be that upfront out-of-pocket expense and then what's
Right.
going to be the savings over a given time frame to see what makes the most financial sense.
Cool. So what I hear from you is that you can contribute to a buyer's closing costs, and typically that could mean maybe a slightly higher interest rate.
Yeah.
But it could hopefully help a buyer save thousands of dollars out of pocket if they want to take a higher interest rate, and you don't charge points. And when points are charged, they typically are charged in the event that, let's say, the buyer wants to lower their interest rate.
Yeah, because the buyer is choosing to, pay points for that lower interest rate. It's not a requirement.
Awesome.
Yeah.
And so there are other ways to get closing costs paid for through grants or special loan programs.
Yeah.
And that's on a case-by-case basis. And typically, what does a buyer have to qualify or have in order to meet the requirements for those types of programs?
Yeah, great question. So for the majority of those assistance programs, and why we're kind of doing a blanket assistance programs and not specifying any one particular program in the market is because a lot of these programs will come in and out of the market. They
Sure,
are based on
yeah.
grants. That funding will come in and out of the market. So
Right.
that's why we go case by case. And very oftentimes the qualifying factors of the program are largely tied to the area that the home is in or that the buyer is buying within.
Right.
There's income limits, and then as well as credit qualifications. And then generally need to be a first-time home buyer, which in today's market means you have not owned your primary residence or owned real estate in the last 3 years.
Yep.
So, but with those programs, and kind of going back to the no free money, generally those programs will come with a little higher interest rate or a fee. So if that's the way that someone can move forward and purchase a home sooner than later, and maybe they're paying high rent, fantastic options and
Right.
something that we always look into. Generally, if we have that buyer that maybe doesn't need down payment or closing cost assistance, typically we can get them a lower cost of funds, lower interest rates, maybe more favorable terms overall.
Awesome. Well, thank you guys so much for watching this. And of course, if you have any questions about down payment, closing cost assistance, anything really real estate related, we're here to help. 661-904-8471 is my cell phone.
818-521-8515 is my cell phone.
Awesome. Have a great day, guys.
Take
Bye.
care.